What's up, you guys? Zoeb here for OneGlanceTrader.com, and in this video I'll be sharing with you a strategy that I've been playing with that I've been able to get an average of 10 pips a day out of the market, and it's got an extremely high win rate, and it's really easy to learn. And I'm going to go through everything from the indicators you need to the setup, the entry, stop loss, and take profit target. So let's get right into it. So what I've got here on the screen, I've got this notepad file which has all the information that I'm going to walk you guys through with some examples on the charts, and I'll put all this information in the description so you've got it and you know what the indicator settings are. So the time frame that I like to trade this with is the 5-minute chart. Again, you can use it on the 15. I wouldn't go any higher than the 15-minute chart, and you'll see why that is once I walk through the kind of strategy. And like I said before, I've been consistently getting 10 pips out of the market, and again, it's got a high win rate percentage in the 70s to 80% kind of win rate. So again, and that's primarily also down to not only the setup, but also that I'm really only going for a one-to-one kind of reward to risk ratio, and I'll go into that later in this video. So let's assume we're going with the M5 chart, and that's the examples I'll be sharing with you today. The indicators that you need are all indicators that you can get from me all for free. Links on the description. They are the OGT ADR indicator, and it doesn't matter which version you're kind of using. The OGT RSI MTF indicator, and the linear weighted moving average MACD indicator. Again, all the links are in the description. And I don't plan to go into what these indicators are and what they do in this video. I just want to kind of call out some of the key points of the settings that you guys need for this actual trading strategy to work. So the ADR indicator effectively measures a volatility of a currency pair over a given amount of bars. So in this case, I like to set the ATR to 15, so it's looking back on the previous 15 days. So that's the kind of settings that you need to determine what the ADR is for the actual day. And you'll look back at the last 15 days, take an average, and then present that on the chart for you in two lines, one above and below the upper and lower band, as I like to call them. And one good thing about this strategy is you don't need to be staring at the charts. Even though we're looking at a 5-minute chart, you don't need to do anything, because all we're waiting for is for price to reach its ADR for the day. So what you need to do is set the alert percentage to 100. So when the ADR for today, or when the movement for today has reached the ADR target of which is the average of the last 15 days, it will give you an alert. And again, you can set whichever one you want. I prefer push notifications to my phone because I've always got my phone with me. So that's kind of the main thing with the ADR settings, and I've tried to do this so again you're not always at your charts, and when that alert comes in, I'll show you exactly what to do inside the setup. The next one is one of my favorites, you guys know, is the RSI MTF indicator. Again, I'm not going to go into the detail. You guys can see it on the screen there. But all what we're looking for is price to be overbought or oversold on the current time frame and one time frame above, which is why quantity is equal to 1 in this example. And MACD indicator, again, is just the default settings on there when you download the indicator in the members area. So those are the indicators that you need, and again I will link to those, or I probably would have already done it while I've done this video, so you guys can learn a bit more about those indicators if you so wish to. Now let's go into the setup. So there's two main key criteria that we're looking for as part of a setup. So the first one I've already mentioned is for the ADR to reach 100% for the day. Now, the reason why we're doing that is this strategy is a counter trend strategy. So we're looking for little pullbacks or full reversals of this strategy. And like I said, it has a high win rate percentage, partly down to the first criteria of the pair has moved more than the expected value or the expected average of its volatility in the last 15 days. Now that's quite important. So if it's moved, X number of pips over than the last 15 days, Therefore, there's a strong probability that there will be a pullback. It's not always happened, hence why this isn't a 100% strategy, win rate strategy. So there are going to be times where you do enter, then price then reverses and continues to trend higher or higher or lower. That will happen, but that's why we've got stop losses in place. But 8-9 times out of 10, it will get to your reward of at least one to one. And just to make sure that we are also in some really extreme conditions at the time the ADR is hit, is the trend leading up to when price hits the ADR target, is what we're looking to do is make sure that the RSI is overbought on the current time frame, which is the 5-minute chart, and also the 15-minute chart, again giving us a strong probability that price will reverse. So we've got price at extreme levels against the historical average, and also the RSI is overbought, oversold. So again, two main key things there that you want to do. But the main key thing is that the ADR needs to be hit, and if there are no RSI overbought or oversold, then you do not. You just ignore the setup completely. So you also got to make sure on the RSI MTF indicator as well that you also have your push notification set on as well. So then, because at the time the ADR may not be when the ADR reaches 100%, 98% of the time you will already get arrows for the RSI MTF indicator, but on the odd chance you don't, you can set the alert up, and therefore you might get some after the situation. So we've gone through the indicators, we've gone through the setup. Now let's go into the entry. So you got push notification on your phone that the ADR is at 100% and the RSI is overbought or oversold on multiple time frames. Now, if I show you an example of this, Friday's price action, the yen absolutely went skyrocketing, and a majority of the pairs, and this is the example that I'm going to show you. And one good thing about this strategy is generally when one pair, for in this example the yen, all the yen pairs seem to also hit their ADR target. So you've actually got 2, 3, 4, 5 different currency pairs that you can trade. And I'll go through a couple of examples, and then I'll go through an example of where it's not the yen, but it also still works as well. So, and again, some days you'll get lull days and the ADR will not be hit on any pair. So, things like that happen all the time. So, what we've got here is we've got the USD JPY, and these bands here are the upper and lower bands of the ADR, which on Friday's price action, or on Friday's calculation, it was 62 pips. And as you can see, nearly did 2,000 pips, and that was a reversal. Yeah, so the actual hit of the ADR was this lower band, and it did this move over here. And all we're trying to do is grab a one-to-one from this move, and you can see if you were in the trade the whole day, then yeah, you would have made some nice pips. So what I said is if I go back to this, is we are looking for the ADR to reach 100% and the RSI to be overbought, oversold. So if we look at this high of the day and price action started here, look over here, and we look at the ADR over there at 626, you can tell that, and I remember this on Friday, that this was the band that was hit. And it might be confusing when you see price action after the day because both bands are hit, but it's actually the lower band that triggered the ADR variation in there. So as you can see, we have got the hit over here at 100%. And the second criteria, if you remember, is that we have the RSI overbought or oversold on multiple time frames. And as you can see here, we have got lots of up arrows. Up arrows started at this level over here, and we have met the second criteria. So you can see here that this is a valid kind of setup, what we've been waiting for. And now what we want to do is find the entry. Now, this might get a bit confusing at first, but hopefully with a couple of examples I'm about to show you, this will be quite straightforward. So what we want to do then is wait for price to close above and below the last MACD cross. So what that means is we're looking now at the point of where price hit the ADR level. So I can't really see because the arrows are kind of in the way, but we'll just assume for argument's sake that it's hit this low over here. So the MACD at the point of where the ADRs hits at this low. And what we're looking for then is looking back to the left of the MACD and looking for where the MACD last crossed over, which was at this level over here. And what we want to do, because in this example we are going long, we want to set a line at the high of that cross, so the yellow line here. And what we're waiting to do is we are waiting for for the MACD, sorry, to close above the line or above the high. So we want the MACD to be creating, in this example, a new high. Yeah, or price to start going in that direction. So what I'm going to do is try to pinpoint that as best as I can. I think I've done that just about. Probably let's just even go worst case and take the next bar. So we can see here, I'll draw a line here because it might be a bit confusing. You can see here at that cross J kind of level, we can 100% confirm that the MACD is now higher than the previous high that it made there. And what then we want to do is we want to enter on that close. So we will place an entry about there, stop loss below the lows, and if you've got a round number level, which is what this level is, just below it, you can use the round number level as an added layer of a barrier for a stop loss, or use the ADR. So let's just say we put it there for this sake of this argument. And how many pips is that? That is, let's call it 12 or 13 pips. Then what you would do is then set your take profit target 13 pips. I don't know where 13 pips actually is, but we'll just say it's around there, because you can see in this, okay, it's a bit more, it's around 15 pips, but you can see there the price made 180 odd pips. So, and all we're looking is to take that chunk. So from there to there, it did that in about 10-15 minutes. Yeah, and that is the strategy inside a nutshell. And if we don't get a close above or below the MACD cross before the NY close, so if price never breaks above this level by the time price action's finished, we then disregard the trade. And generally 9 times out of 10, I'll show an example where it doesn't hit, but most of the time it kind of does. And I kind of skipped across here in terms of stop loss and take profit targets. So you want to put the stop loss above or below the recent high low. So in this case, the low over here. We want to put the take profit a minimum of 1-to-1 reward to risk. And if the take profit or stop loss is not hit after NY close the trade. So if you're doing this on a Friday, you just need to make sure you do it just before the market closes. But effectively, if wherever price is, whether it's you're at a loss or you're in profit, close the trade out, because again, we are starting a new day, and therefore we're talking about new ADRs and things like that. So make sure that you close the trade. Obviously, adjust your risk based on 1, 2, 3% of your account, depending on how aggressive that you trade. But in a nutshell, that is the strategy. So what I wanted to do is go through another example with you on a yen pair, and let's go with the New Zealand yen. So we know step 1 is ADR reached 100%, RSI overbought, oversold on multiple time frames. So what you can see here, I think it was this one. Yeah, so you can see here the ADR for the day is 56, and depending on where you put the start of the day and there, it's around 56, because the gap from here to here is really low, so you know that this was the actual move. So we've got the ADR hit at 100%. Let me move this one out of the way, and we've got the RSI oversold on multiple time frames. So this MACD looks a bit funky. So if we have a look here, when price got to this level, this was the kind of cross. So we're waiting for the previous cross before, which was this level over here. So if I bring this down till there, and I get my cross chair up and looking for when the MACD goes in, let's just say worst case scenario, you get the high over here at this level, just so it's there. You put your stop 17, 18 pips below, and then you look to make 17, 18 pips. And again, you did that relatively comfortably in about, half an hour, 40 minutes, or whatever it is. And again, you can see price got to 70 pips there. So one of the strategy you can use from a take profit or stop loss perspective, you set your stop loss, but you don't set a take profit. And what you do is you close out the trade just before the close of the New York session. And again, depending on, and then if it does go 30, 40 pips in your favor, you can move your stop loss to break even to kind of protect yourself. But generally what happens is you normally get a big move down and kind of a reversal. So another strategy in terms of money management is that you put your stop loss in, and then you set an alarm on your phone an hour before the close. If your stop loss isn't hit, therefore you either must be in a slight loss or in a slight profit or a big profit. In this example, you would be in a big profit, so then you would then take close out the trade. In this case, you'll make more than 10 pips a day. You'll make it for the whole week. So that's another strategy you can use there on how you want to do that. Two more examples just to kind of hone in the point, because I appreciate that the MACD bit might be a bit more difficult to go in. Let's just work out if this was price 67 pips, and that was only 40 odd. So therefore the ADR hit was at this level over here. So we can see when the ADR hits that level, we're at this point over here. So, and again, the RSI is overbought on multiple time frames. So we're looking at the last cross. The last cross happened at this level here. As you may not be able to see it, but you can just see that the yellow line crossed across over here. So if we now move this to just below that low and move this one, let's just say worst case it was over here. So now we take an entry at this red bar over here above the highs, 20 pips, 28 pips. And again, if you waited till the close or just about, you then also would have made 19, 20 pips as opposed to 28 pips. So again, another clear example of where this works. And when it does work, it normally happens with multiple pairs, you normally get the same outcome. So again, if you traded all the pairs, imagine that you were going inside the right direction, therefore you can gain some serious pips out of this place. And I just want to show you in the same thing, and we're not even looking at yen pairs on here. I think it was the Euro GBP was the example. This one's slightly a bit different. So you can tell here of that one. It wasn't this one, obviously, so it has to have been the 64 pips, would have been this level over here. You can clearly see we've got the RSI oversold on multiple time frames. So if we look at where the MACD was, again, you wouldn't see any of this stuff, so you just look at where the MACD is. The MACD is at this level here, so we're looking for the previous cross, which is this one over here. So what we would do is put it there, and now what we'll do with the MACD over here, we just wait for price to close above. And again, let's just say worst case, you take this bar over here, which is way above. You can see, but you can see where I am here at that closure, way above. I think this bar would be better here, but let's just say you get in around here, you got 22 pips, and again, depending on spread and stuff like that, you might just be at break even, and therefore you might even made a small loss depending on where and when you kind of got out of this trade. But again, another clear example there of a potential winner that you guys would have gained pips on. And then lastly, on one pair that hit the criteria but it wasn't actually a trade. So if we look at this scenario, I think it was this level over here. So we've got, this is where the MACD was at the time of the RSI overbought, oversold. So if we look back, we can see at this level over here that price that the MACD made the previous crossover. So then what we're doing now is for price to close above this kind of above this level, and as you can see throughout the whole day, it got close at one point. We probably thought that this would have started reversing back, but you can see clearly that price did not close above this line, and therefore it would have been a no trade. So again, this is why I kind of used the previous MACD cross. It kind of saves you majority of the time for a no trade, but also gives you the confirmation majority of the time that the trend is starting to shift. So I really hope that you guys enjoy this strategy. Again, I'll put all this information inside the description. If you guys have any questions, drop me an email. You guys know that by now. That's also inside the description, or leave me a comment, and then I'll go into it in a bit more detail. So hopefully you guys have fun with this, have a play with it, test it out on demo. Let me know how you get on. Indicators inside the description. And if you like this one, I strongly suggest that you check out my Forex scalping course, which is on the screen now, and you can get that full playlist right now and start watching that on YouTube. So I should see you guys in a second.